So Kin-Hon, I'm going to start with you. The dynamic in the multifamily housing sector has changed and it's focused more towards resident amenities nowadays. Well, there's an obvious draw towards prospective tenants. How would you say that's now affecting the multifamily housing as a sector?
Resident amenities have become more important over time, especially when the developer use the project offerings to differentiate themselves from competitors. Certain amenities like swimming pool, barbecue pits are expected by most of the tenants. Some amenities, the long-term value add may diminish because of technological advances and lifestyle changes, such as car park lots in Singapore may not be that critical.
Okay. As somebody who's based in Singapore, do you find that the investment within Singapore, is that being put into multifamily housing? Is there now more of a focus for that? Is it's attractive for investors?
There are a lot of outward investments. In fact, if you look at just last year, overseas investments involving Singapore-based investors rose by about 40% to a total of US about 28 billion. So there are a lot of Singapore-based investors invested overseas in certain niche asset classes such as student housing, multifamily properties, because of our small deployment base.
Absolutely. So Neil, if I can come to you, I mean, as we've just discussed, outflows from Singapore have been going towards, actually particularly towards the UK market. Can you tell how those funds have been invested and what's the effect now on multifamily housing in the UK as an investment destination?
Sure. I think what we're seeing is a large amount of money coming from Singapore into the UK. And in particular, there are funds such as Soil Build, Keppel Land, Mapletree, and Singapore Press Holdings, who've all been very active in the UK market, in particular in student accommodation, in the last year. Those companies, though, what we think might happen is they've been particularly interested in student accommodation, but they might be using that as a springboard for multifamily housing as well. So if we go back to 2013, 2014, we saw Greystar from America come into the UK. Their first purchase in the UK was actually student accommodation, and they used that as a springboard for now doing multifamily housing in the UK and across mainland Europe.
Okay. John, if I can come to you, I mean, Greystar, obviously it's a US-based company. Really the US has led the charge where multifamily housing is concerned. What's the current state of that within the US, and is it an attractive place to invest at the moment?
It is. It's just listening to Neil and Kin-Hon, you know, 20 years ago, 15 years ago, you wouldn't have heard global institutional investors coming into markets, crossing borders to invest in multi-housing, let alone student housing. But that phenomenon has completely changed. And multi-housing, student housing is an institutional preferred asset class today. The U.S. is multifamily right now is one of the hottest sectors in the U.S. and I think will remain for the foreseeable future. If you look at what's happened in the U.S., home ownership rates have declined measurably since the downturn in 2007, 2008. Back then, the home ownership rate in the U.S. was about 69%. Last year, it dipped down to 63%. It's inched up a little bit to 64%. But you look at folks like me, you look at baby boomers, you look at millennials, everybody's moving back into the cities, reurbanization, everybody's moving away from private housing, single family housing, and they're moving to rental housing. And having the ability to talk to folks like Neil and Adam and discuss what's happening with trends where you have these institutional investors investing in multifamily housing is something that I think separates and differentiates Knight Frank from the rest of the organizations and the rest of the companies. We're at a global conference this week learning about what's happening in everybody's market, learning and hearing about what's happening in Singapore or Manila. Or London for that matter.
As a dynamic though, do you think, is this brought about, multifamily housing has become more popular out of high housing, the cost of obviously the property market, high housing prices, or is it more of a change of mentality about how people see themselves living within an urban environment?
It's a demographic shift, and the demographic shift is creating an investor shift, and I'll let Adam speak to that.
Yeah, so picking up from what John's saying, we're definitely seeing the same trends in the UK as John's experienced in the US. We're probably 15 to 20 years behind where the US is in terms of the maturity of the market, but we're definitely seeing that trend come through. And I agree with what John's saying. It's definitely a change in lifestyle. You know, if we look at how people occupy buildings now on a residential basis, it's the same as how people operate mobile phones. Increasingly, cars are rented now rather than owned, and we're seeing that in the residential sector for sure. We're also seeing that in the commercial sector in a similar sort of way, where occupiers of offices are looking for flexibility and looking to rent things on a shorter term basis than maybe they had previously. We do have a slightly different dynamic in the UK than in the US, in that we have a finite amount of land and we have a real supply issue, which has really driven up prices. So in the UK, there is also a response to the housing crisis, which does, to a degree, come down to the affordability issue. So I think we're seeing as a combination of the two, but certainly lifestyle changes are the major shift in the trend.
I mean, if I can turn that on its head, if there is a considerable increase, and this is really open to all of you, in terms of multifamily housing, if that demand then becomes more popular, then surely there'll be an impact to the value of property as well, particularly in prime locations within the cities. Would you agree with that?
Yeah, so we've seen the increase in value has been predicated on institutions seeing that this trend is taking place and the benefits of that income. A lot of our investors now are very focused on long-term income to meet their requirements, whether it be pension funds, insurers, and they're seeing this as a real opportunity. So we're seeing huge volumes of wealth and capital coming into this sector to take advantage of that income stream, and that's driving up prices. I know that's the same in multifamily as it is in the student market as well.
I'd like to go around the table and just each of you get to pick one destination each. As you mentioned, John, this is obviously, it's a global valuations conference. Out of the multifamily housing market around the world, the emerging economies, which cities are to look out for in terms of an investment destination for multifamily housing? If I can start with you, Adam, we'll work our way around this way.
Yeah, so I think we've seen a lot of activity in the UK, but I think moving on from that in the future, we're seeing some of our investors. Neil pointed to Greystar. We've seen them come into London, having experienced what they've experienced in the US. They're now going into mainland Europe, so we've seen huge activity in Dublin recently. But I'd really look out in the future for Madrid, where their market is a little bit behind where Dublin is, and some of the other cities in continental Europe, which are seeing the exact same trends. So the Netherlands, I'd be looking at Amsterdam. Germany obviously is a very established market, and also in Australia, where the sales market isn't quite what it was, and this lifestyle change is happening there too. And I think they'll experience similar things in Australian cities.
Absolutely. Neil?
I think outside of the UK, more particularly in my field, is student accommodation. So looking at, similar to Adam, Dublin has seen a lot of growth in student accommodation in the last 5 years. Those operators and investors that came into the UK a few years ago, so the likes of Greystar with Goldman Sachs, Canadian Pension Plan Investment Board, and others are now looking at mainland Europe, so using the UK to springboard into mainland Europe. So all the major cities in Europe are particularly of interest to investors. So you've got the Italian cities, Florence and Milan in particular. You've got the Iberian Peninsula, so you've got Madrid and Barcelona and Lisbon, again very popular with the student accommodation developers at the moment. Further afield, we have colleagues in India, and there is some staggering number of young people between the ages of 15 and 24 in India at the moment. It's the largest. It's 232 million of people in that age group. And they're looking at that as being a huge demand for purpose-built student accommodation will come from those students going forward.
Okay, John?
I'm a New Yorker, and New York keeps expanding. And when you look at Manhattan and what's happened with multifamily housing in Manhattan, it's gotten very pricey. It's expensive for young people to live there. It's expensive for old people to live there. So it just keeps growing. And looking at the peripheral areas around Manhattan, Long Island City, Brooklyn, Jersey City, and Hoboken, the ring keeps expanding around Manhattan. But I have to give a plug to our host city, Dubai. I've never been here before. This is my first trip here. Knight Frank is having a wonderful conference here in Dubai. And if you walk around the city, if you drive around the city, the housing stock and the cranes that you see, and it's amazing. A lot of it is waterfront. A lot of it is new. It's modern. It's beautiful housing stock. And I think that if I had a choice, if I was a young person looking to move somewhere in the world right now, Dubai would be a pick city for me.
Fantastic. Thank you.
Singapore-based developers, they still prefer UK, US, and even Canada. So even recently, some of the big developers, they have invested in Latin America, joint venture with the company there.
Okay, very good. Wonderful. Well, I'd like to thank our panelists for their time today, and that concludes the third session. Thank you.